Hey guys, Mike here. So today we're going to talk about something to me is really important, and obviously, when you're trying to figure out, people say, "Oh, we're at the bottom or not the bottom," all that stuff. And my question always comes down to, well, like, how can you be at the bottom if certain major sectors that make up an index haven't rolled over yet, right? They may have just started to roll over, but not even close to actually rolling over, right? And so that's why it's important, especially in this video, to pay attention to this and to pay attention to all the indicators out there. And because, believe it or not, I always say best time to learn, right? And so, I'm not an expert in this sector, but I'm certainly a lot more educated than I was starting January. That's for sure. And there will be a lot of opportunities in this sector when it does finally completely roll over and go bust. But, that's why it's important to pay attention to, and I'm going to show you that. But, one reason I want to bring this up now is because this came out over the weekend, and it's the real estate market, right? And it's something about banks. The biggest thing is not just the real estate market. I'm talking about the banks in general, right? The financial sector. And it says mortgage market upheaval spurs $17 billion in paper losses for banks. And I believe this will get much greater before it's all said and done, right? I mean, even buybacks are being put on pause because of this. And you remember they were going up after earnings. Like, oh, man, we're going to earn a whole lot of money off this interest and stuff. And they park our money with the Fed and things like that. But what's really happened, think about the exposure they have to the real estate market and what's been going on in the real estate market. And I'm going to show you that in detail, right? And so like Wells Fargo is a big one, right? They have an additional $2.4 billion in unrealized losses on mortgage-backed securities, which is what the Fed's been propping up for years, and they're not anymore, and other bonds that weighed on shareholder equity in the third quarter, which of course nobody really seems to be talking about that. And when you look at this, these unrealized losses have climbed to $17 billion over the major banks right now, right? And so, and understand this doesn't appear on their income statement right now because they haven't sold anything, but under the accounting rules, they still end up hitting the bank's balance sheet, which is important. And these are all the major banks right here. And to show you what this looks like, so right here, we're going to look at AOCI for the third quarter. And AOCI is Accumulated Other Comprehensive Income. I love the acronym there. And so right now you're looking at $102 billion negative after adding on the $16 billion drop in AOCI. And when you look right here, just the exposure they have this is banks' mortgage misery, mortgage bond losses have swelled and available for sale portfolios, right? And you see JP Morgan and Wells Fargo lead by a mile. And so this is the exposure they have. Remember, they haven't sold these yet, right? So these are at a loss. So if they sold these, that would be a major, major loss they'd have to report. But again, it's just sitting on their books right now. And so I'm sure, investors are going, oh, don't worry, this is fine, no problem. And also, the reason why you pretty much know, this is going to get worse, because look at the annual income needed to afford a median price home now. As of October, it was $107,000. And that's just massive. If you look back in 2021, it was around $70,000. If you go back just, like 7 years ago, it's half that. This is amazing to see, but this is what inflation does, right? This is how fast prices have gone up. And that's why I keep saying, this is not 08. So I'm going to be very clear about this. This is not 08 because we have way too much equity in our homes. People are in a much better situation right now. But, buyers have just disappeared right now because of the high interest rate and how expensive things are. And please don't forget to hit that like and subscribe button and share this video, guys. It really helps the channel out. Thank you very much. And again, I want to stress, I don't think this is 08 at all. A lot of people are calling for that. I don't see how, because I remember 08. I lived through it. That was a train wreck on so many. There's so much fraudulent stuff going on at that time with the banks, with predatory lending and everything else. People buying houses, by the gazillions way up here. And then when it crashed, everybody got burned. Well, it's a different story now. People are sitting on so much, like probably a record level of equity in their homes. Even if it does crash down, most likely it just goes down to what they were worth previous to this whole inflation run, or maybe a little below, but still. Now, for the people who obviously, we all know people who did this, refinanced up to the new value to take it out to do their kitchens or put in a pool or something, well, that's a whole different story, right? I don't know how many people that is out there, of course, and we won't know. But I don't think you have anywhere near the amount of predatory lending. Banks are way more flush with cash and everything to handle something crazy like that. But again, the big thing is, what do you see happening? Because rates will continue to go up. Right? We know rates are going to continue to go up, right? Which means, and also, what are you going to see out there? If layoffs continue to happen, if people get really more afraid of there's a recession coming, are you going to be running out and buying a house in that hot mess? No, right? And so these numbers to me will get worse. But again, I'm no expert in real estate business. I'm just going off the numbers here. So let me know what you think in the comments. But if you look at this stuff right here, newly privately owned housing units, single family units, right? And so looking at that chart, I might see a bit of a drop there. It's falling off a cliff right now. And if we pull back here and go all the way back to the 1960s, you can see when you have big drops like this, recession, 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 it's always previous right to the recession, right? I mean, big drops, and you get recessions, right? It leads us right into it because the housing market is the first thing to go because it's the biggest ticket item you're going to be purchasing stuff. And so right now, there we are over here. There's the drop, right? But we don't have a recession yet. Not saying it's going to happen, just saying. And then you go over to new privately owned housing authorized and permits, right? So these are the permits for total units. And you look, well, yeah, I mean, that kind of looks the same. So it's falling off a cliff right there. And if we pull out, once again, when you get a big drop, recession, big drop, then a recession, big drop, then a recession. And you can see this repeating multiple times throughout here. Every time there's a massive drop, and we don't have to be that big a massive, you get a recession, right? And so here we are right now, and this thing can drop a whole lot farther, as you can see, to lead us into a recession. And if we go into recession, of course, people aren't buying houses in recession, right? And then we go over to the monthly supply of new houses in the United States. And, remember they said, oh, man, we got a huge problem with the supply of houses. Well, all of a sudden, it's going up quite a bit, right? I mean, it's already still past, even with that pullback, we've already beat 2010 levels, right? And so, of course, why people aren't buying houses, but there was already houses under contract to be built, of course. And, when we sit here and go back, and you look and pull out here, well, guess what? When this goes up, there is a recession. It's the exact opposite, right? Permits come down, supply goes up. And so, obviously you can see it multiple times right here. 1, 2, 3, 4, 5, 6, 7. And then here we are right now. And so could this be the 8th time? Most likely. We'll see. And then, of course, what's not going to help this problem? Who's the biggest buyer of mortgage-backed securities, by the way? Oh, it was the Fed. Yeah, and what are they doing? Well, on a much smaller scale, they're actually doing what they said they were going to do, surprisingly, and they're lowering their balance sheet, right? They're not supposed to be buying mortgage-backed securities or bonds and stuff like that. And you can see, I mean, just look at that. My God. Every time I look at this, I've looked at it 100 times, if not more at least, and just look at that mess. I mean, this was supposed to be during a strong economy they were doing this hot mess. And then you see what happened in 2020 here. I mean, look at that. That is the epitome of ridiculous. That just fires me up every single time I see that mess. And just look at that. There's the dip. I mean, there's the major sell-off, right? But you see when we close in, I mean, what is that, like 300 billion maybe? Down since May, I guess, since April. Yeah, about 360 billion since April. And so they're rolling them off, which doesn't help, obviously. And that's why, this is from Goldman Sachs. And this is what I was saying, if Goldman Sachs is even close to being right, and they're going to continue to raise these rates, and we do get up to 5%, especially at the pace, which you'll see another video I got coming out on Friday for you, it's something that's never been done. And you just look at that and you're like, wow. Because that means as they raise that rate, then everything else is going to be that much more expensive. Housing is going to be that much more expensive because you're going to see those mortgages still going back up, right? Those mortgage rates. I mean, some people were predicting like 10%, which would be stunning by year end. But I mean, who knows, right? I mean, we'll have to see, or at least they're predicting it by at least first quarter 2023 as well, I've seen. And they may be right. I've said 8 by year end. We'll see if that happens because we had a nice little drop off last week. But then like I've seen people at banks get interviews saying, yeah, we're not really going to drop the rates that low because we think rates are going back up, and it's just a mess. And of course, who's doing layoffs, right? Anything that's got to do with the mortgage industry for sure. And if you're in the mortgage industry, let us know how it's going because I know every area is different. But the banks, again, I mean, I'm looking at those stocks, they've been doing pretty dang good, right? But when you look at that, and if that situation gets worse and worse and worse, I don't know how long they hold them on their books for. I have no idea. Right, but it's like oil. As I've showed the members in detail, like oil doesn't react how you think it reacts, especially going into a recession. And financials. And the reason why this is important is financials make up a whopping, as you can see right here, 13.64% of the S&P. And so if the financial stocks finally do roll over, if they have to start reporting these and selling this stuff for losses, then obviously what's it going to do? It's going to drag down the S&P, right? Same way when oil stocks who are setting record levels, everything returns to the mean, everything, okay? And what happens when our economy slows down and China slows down? Yeah, oil will come down. I don't care about production. I don't care about any of the rest of that stuff, right? If ain't nobody to buy and don't need it, then speculation is going to bring it down. People are going to take profits because they're up so much in those investments anyway. And so if this one adds on to it, that's just another reason to sit there and say, how in the world has the S&P bottomed? I don't know. I mean, and I'm not predicting that it hadn't bottomed or it has bottomed. I'm just saying, it's food for thought. You tell me. I can be totally 100% in the wrong, of course. But, that's two areas that hadn't rolled over yet. And so, it's just something to think about. And that's why it's very important to take a big picture view of things. But, let me know what you think down in the comments, guys. I hope you guys have a great Thanksgiving. Tomorrow, I'll end up seeing you Friday for a video that I think you'll actually enjoy and like. And again, it's big picture view, something you need to know because that's where big money's going to show you exactly where big money's rolling. Okay, and that's what you got to follow. Jump on the coattails and ride with them. Okay, whether it's in a trade or a long-term investment, that's a whole different story. But anyway, I'll put that out there to you. I'm about to hit the road. Got to head to Alabama to see my mother-in-law for Thanksgiving. So hope you guys have a good one. I'll see you later.